Hello and welcome to BharatBulls, where we show you how you need to think in the markets to be in the top 1% of traders. The aim of this channel is not to get you rich tomorrow, but to steer you in the right direction so you become independent in your trading career. So, how is it going, guys? Today I am back again with another video, and this time I am diving deep into the insurance sector in India. This was something that was requested by one of my followers on Twitter. So, what I did over the weekend was dive into a lot of research that has already been done by a lot of these firms, dive into the annual reports of IRDAI, which is the regulatory body of insurance sector in India, and dive into a lot of the macro level data and a lot of changes that have happened in India over the last couple of years in this particular sector. And I have come out with a lot of content for you guys, and I hope you like it. So what I will be doing in this particular video is sharing with you the fundamental changes that have taken place over the last couple of years, and then towards the end of the video take you through a lot of charts in the insurance sector, a lot of setups that I saw that are forming on the charts that would be of interest to you going into 2024. So what I will do essentially in this video is walk you through the Twitter thread that I've already done. So I posted it earlier today on 19th of December, and will walk you through what I have found and why I think insurance is a sector ripe for growth in the coming years and in the decades to come as well. So if your horizon is long, if you're looking to invest in the long term for the next 3 to 5 years or even further than that, then you're in the right place. I will discuss why insurance in India is a sector you should not miss out on absolutely, now that a lot of players are entering this particular industry and a lot of things are starting to move. So, beginning with the absolute metrics, India's insurance premium volume was 127 billion as of 2021. Within this, 75% share was of life insurance and 25% was of non-life insurance. And we have seen a steady growth in insurance premiums in India over the last couple of years, and we have more often than not surpassed the global averages in the recent years as well. The Indian insurance market is expected to reach 200 billion by 2027. Now, this impressive growth rate has been driven by a lot of factors, and a lot of this growth is coming on the back of COVID as well, because of reasons I will discuss in a couple of minutes. So, before that, I want to talk to you about some of the metrics that we use to track the insurance industry in a particular country. So there are two metrics that we generally use. The first one is the insurance penetration. It is simply calculated as the ratio or the percentage of the insurance premium to a country's GDP. So if you remember, our GDP is somewhere around $4 trillion as of this moment, and we have roughly $150 billion insurance industry. So if we divide those two numbers, we get an insurance penetration of somewhere about 4%. Now this penetration percentage I will compare with the rest of the world as well in a bit, but I want you to remember and I want you to see the trend that is playing out in the last 20 years or so. We have grown from 2% penetration rate to over 4% penetration rate in the fiscal 2021-2022. The next thing that we use to compare the insurance industry in a country is the insurance density, and it is calculated as the ratio of the premium to the population per capita. So it essentially calculates how much money per every person in the country is spending on insurance premiums. So in 2001 this was less than 20 USD. Over the last 20 years this has risen fourfold to over $80. And this is just at the beginning. If you know anything about trends in India and how things have the potential to grow exponentially with the digital penetration that is currently taking place, you know this chart is just at the beginning of its exponential journey. So keep a radar on this particular metric as well. So going back to the thread, we have now in front of us the metrics compared to the rest of the world. So the first number on the left over here is the insurance penetration. So if you notice that we are just beginning to compete with Australia, Germany, and the rest of the world when it comes to insurance penetration. In the coming years, we are supposed to leapfrog all of these countries and come somewhere close to UK and USA in terms of the penetration rates. And look at the number of non-life insurances that are taking place in USA and UK and South Korea as well. Even look at Canada for that matter, and look at the insurance penetration for non-life assets in India. There's a huge potential here for Indians and for those investing or for those who are looking to invest in India. Coming to the insurance density, we are barely visible on this particular chart, but look at the potential that we have in front of us. Look at the non-life component of this particular chart in the USA. People are spending on average 2000 or 6000 on non-life insurance premiums annually in the USA, and we are not even cutting through, I think, 500 US dollars. So there's a huge potential for Indians in the coming years in this particular industry. And to see some of the trends, so this is the insurance density chart compared for India in the last 5 years before COVID. Look at how stagnant this growth was. This was barely 10% growth, and even in these 3 years there was barely any growth. But if you go back and see the penetration rates after sorry, this is the wrong chart. If you go back and see the density rates after COVID in these particular years, look at how significantly this number has jumped, and this is bound to grow even further. Now, apart from this, there have been a lot of fundamental drivers of this particular sector. So the first one is demographics. Of course, India is a young population, and most of the young population is in its working age, in its prime age, where they are insurable and they have a lot of assets to protect, including their health, their family's health, and their own lives as well. There is a lot of expansion happening in the middle class. A lot of people are coming out of poverty into the lower middle class section, and those in the middle class are beginning to dive into the upper middle class and rich section of the population as well. And this is where people are starting to get worried about things that they really care about: their health, their life, their assets that they have built over the years, and that is why there is so much potential in this particular industry. The third thing that has really worked well for this industry is the digital behavior patterns. Now, I do not need to tell you how important the digital penetration for Indians have been in the last couple of years since Geo has revolutionized everything in India. People are preferring to renew their insurance premiums online. Agents are comfortable video calling their clients as it gets things done very quickly, and people are generally adopting for human touch point less options instead of having to wait in lines for their insurances. Other than that, a lot of things have been taking place outside of the user base in the regulatory landscape as well. So IRDAI, which is the regulatory authority for insurance in India, has taken up the mission for insurance for all, wherein they would like to have insurance for all the population of India by 2047, which is a very ambitious number. But the journey is 25 years long, 24 years long, and we have a lot of things that are working in our favor, and I'm sure IRDAI can achieve this mission. And if it does so, there is so much money to be made for all those that are willing to invest in this particular sector. A lot of initiatives have been taken by the government. In the union budget earlier this year, the government had proposed to limit the income tax exemption on the proceeds of high life value insurance policies. So that means the income from these policies will be exempted from tax as long as it is under 5 lakh rupees. And if you want to have a look quickly over the other initiatives that the government has taken place, you can take a screenshot of this particular image. I have taken this image from this particular website. If you want, you can go through my Twitter thread and read it in details. A lot of other things have been happening outside the government landscape as well. A lot of private players have started to come in and make inroads into this market. For instance, in August 2023, Tata has launched a ULIP plan with critical illness covers. In June 2023, GoDigit has now bought stakes and plans to invest about 500 crores in the initial 18 months. And if you want, you can take a screenshot of this as well and read it in your own time. I won't be going through the rest of it. So what I would like to summarize this fundamental side of the video is that there is a tremendous amount of potential in the insurance sector, and you should be looking into it. And coming now to the technical parts. So there are about 8 companies that I have over here in my watch list that are listed in the insurance space, and I like to keep my analysis portion very simple. I don't have any indicators on my charts. I just use simple price volume and relative strength as my metrics to judge the performance of a stock and consider if I want to invest in it or do I want to still stay out of it and take some time before I commit any money to it. So I'll be going through each of these eight charts, and please watch very carefully what I do when I see these charts on the screen and what is my thought process behind them. So the first stock is general insurance. If you see the performance of the stock throughout the year has been pretty subliminal. It only started moving with the rest of the market in March and April, and since then it has had a phenomenal performance of about 135%. So if you can see on the relative strength as well, it has been constantly improving. Some great volumes coming in. So I will also cover a lot of other names on this particular list that have also showed tremendous pickup in volumes in recent times. That signals that big players are entering this industry, and if you want to ride the trend with them, your chance to get in is right now. So if I dive deeper into the hourly time frame, and I do not try to go below the hourly time frame as well, as that is just mostly noise. So I can see some sort of cup and handle also playing out over here. Yep. So a cup and handle is information. So once the price crosses above 332, that is when you can look into it. If you want, you can have this as a pivot point where you can cut 50% or 75% positions if you want to be aggressive. If you're a little longer term player, you can have this particular pivot as a stop loss. Yeah. So tremendous relative strength. This is exactly what I'm looking for in this particular industry. The next stock on the list is HDFC Life. So HDFC Life has had some decent performance, but not that great compared to general insurance. It has formed a flag structure since March as well, and it has just moved out of this flag region. The only thing that worries me over here is that this flag breakout has happened on the back of relatively lower volumes. I would have loved to see some volume pickup, something like this over here. And since then the stock has done absolutely nothing, has in fact retraced back to its breakout region. I don't suspect this to be taken out anytime soon unless and until there are some significant volumes. And look at the volumes that have come in the last 3 or 4 days, higher than average volumes coming in on the downside, which is not great to see. So moving on, we have next the ICICI General Insurance. Again, also very similar movement to HDFC Life, also forming a flag pattern since earlier this year. And something I noticed about this stock, if I switch to weekly time frame, is that it moves very violently on the downside whenever it does. So it had two good candles and then suddenly it started moving down, and this was the general trend in during that particular time in 2022 and 2021. But I don't like to see such things on the chart. And look at the relative strength, absolutely no relative strength in the stock whatsoever. So coming back to the daily time frame and going on to the next chart, we have LIC. Again, look at, this is what I was talking about. Look at the volume pickup, look at the pickup in relative strength, still not close to taking this relative strength out of these particular pivots, which means it is not as strong this time around than it was over here. But what I love to see is that the pickup in volume has been absolutely phenomenal. What I would like to see now is if there is a pullback to this particular region somewhere around 750, and if the volumes remain consistently low, that is when I would like to start to look into this particular counter and start building some positions. The correct way to build this build into this sector would be through SIP. So start committing some money to it every Monday, Tuesday, or whatever day of the week you like. It's still not close to its IPO price, if I'm not wrong. Yeah, so it's still relatively far away from IPO price, so this will always pose a resistance. But nonetheless, it has moved above these particular pivots that could have posed some significant resistance, but it did so very easily. So this is looking phenomenal on the charts. And if you want, I think this would be this could be a particular place where you can start looking into some sort of consolidation. And if you see a wide range candle on the upside over here, something like this, that is what you want to see on the charts when you start to take some major positions in this particular counter. The next particular stock is ICICI Prudential. Again, this is a stock that I have already shared on my Twitter handle. Classic flag and pole formation in play. Still no trade yet. As long as there is no violation on the upside of this flag. The volumes were relatively good over there, which is when I remember I posted this. But since then, the stock has absolutely done nothing. Very close to testing this pivot out. If it does, the trade would be invalid. But I hope longer players stick around and can take this price back up. SBI Life is the biggest insurance in the is the second biggest insurer in the public space. So the thing I don't like about this particular stock is that it moves in bases and it tends to stick in those bases for a very long time. The relative strength and is very choppy as well. So I don't see a lot of movement in this particular stock on one side till now, but it may as well surprise because this is the stock markets. Anything can happen. So if you see, there are a lot of bases that are forming, and another base I can spot over here, and it has moved above this particular base and it is just coming back to test it. So a retest of demand is going to happen at some point in the future, I anticipate. If it does, it could be one particular stock you could look into, but as in terms of relative strength, it is looking absolutely horrible compared to some of the other players that we have already seen. StarHealth, again, I won't go into much detail about this one because I know the relative strength has been very poor. Why would you want to commit your mind to something which is not showing any signs of strength? You have better options outside. The next option is POLICYBZAR. Now, POLICYBZAR is also a recent IPO name. I saw some contractions happening on this particular chart sometime in April. I did not take this particular trade, but it did work out very well. I did not see a lot of volumes, I think, during its breakout, which is why I did not go ahead and initiate it. The volumes over here were not convincing enough compared to the volumes that were coming in earlier on in the year. So I did not initiate a trade, and of course, after some point, I even saw this being tested out. So I just drew this particular flag pattern today. Nothing special in this particular chart. It is showing some good relative strength. It is consolidating after breaking out of this flag and pole, but a lot of resistance lies ahead for this particular chart. So unless and until something dramatic changes or I see a lot of volume pickup in this particular stock, I would not be interested in taking this counter. And the last stock on the watch list is the New India Assurance Company. Again, look at the sister stock movement that it has had along with LIC and General Insurance. Look at the volumes that have come in. Beautiful relative strength pickup. Absolutely no volumes on the way back, on the way down. So I would just be I would like to mark something like this on the charts. Just draw something like this. No confirmation of this is almost a vertical pickup in the charts. So whenever such things happen, the moves tend to linger on for a long time, and it can easily surprise us by continuing the trend all of a sudden. So I think it is trading at all-time high levels, or is it not? Let me switch to weekly time frame. Oh no, it's not. It's way off. But no worries. This is fine. It is good to see that it is consolidating above these pivots and somewhere around this particular region. This is expected. This is normal stock price behavior. The stock cannot move 10% every other week, and it is okay to expect some sort of consolidation before any further up leg comes. So as far as the players in the insurance industry go, my preference would be very limited. I would prefer something like the New India Assurance, LIC, and GICRE as my major stocks that I would look into scale in. GICRE is forming a pattern as we speak, so this would be my first preference. Relative strength has been exceptional, volume pickup has been exceptional, and the remaining stocks are yet to be seen. If they perform very good, I will of course reanalyze and look into it. So if you like this video, do consider subscribing the channel, follow us on Twitter, give me a shout on Twitter if you want to have any stock analyzed by me. I have been posting a lot of stocks recently from a positional perspective. Some of them have already given more than 20. So this one I posted of a company called Sanduma. It was from the metal sector, has moved up almost 50% since I started posting about it. So I do post these charts regularly on my Twitter. I will be more regular in posting these hopefully in 2024 as well. So I hope you guys have a good day and enjoy this particular video. Thank you so much for watching. Jai Hind.